Hey, it's Dan Moralez, and this is Homebuyer Radio, episode number 64. This week, I want to talk about interest rates and the recent run-up in interest rates and how that came to be, okay? One thing I want to do before we get into this week's episode, though, is I want to remind you that this week, Wednesday, is Valentine's Day. So if you haven't already made plans to do something special for that special loved one in your life, make sure you do that, okay? Don't forget, it's this week, Wednesday, the 15th, is oh my gosh, not the 15th, the 14th. Ha! Okay. See, it goes to show you how much I know. This week, Wednesday, the 14th, is Valentine's Day. Make sure you do something special for that loved one in your life. But what I want to talk about is I had a conversation with a client this week, and that conversation was something like this. It was actually through an email exchange that her and I were having. She's been looking for a house for a while, finally got an offer accepted, and is concerned about the recent run-up in interest rates and how that's going to impact her. But one of the things that she had said in her email to me was, every time I talk to you, interest rates are higher. She was disappointed, which I totally understand. And I think she felt like that was something that I personally had some control over in regards to, where rates went. First of all, I don't. I wish I had that much power because I would give everybody like 0% and I'd write every mortgage in town and I wouldn't know what to do with myself, right? The truth is, I don't control interest rates. The bank I work for doesn't control interest rates. The market controls mortgage interest rates. Obviously, every bank and every company has a pricing strategy as far as how they set their rates and terms and good stuff like that. But I don't personally control what the market does. The market, in large part, drives where rates go. What most people don't understand, and there's some other episodes that we did in the podcast that go back and talk about kind of how or where mortgage money comes from. But what most people don't understand is mortgage money comes from Wall Street, right? And Wall Street in particular from the bond market. And the bond market is really where, rates are set from. What an investor is willing to pay for, a bond is going to drive what your cost of money is going to be long term, okay? Well, what's impacting what investors are willing to pay for a bond? The largest buyer of mortgage bonds, or the larger, if you will, source of money that's been used to fund mortgage bonds, which ultimately is what you get when you get a mortgage, right? Where that money's been coming from, it's been the government. Okay, the U.S. government has been the biggest buyer of mortgage paper since the housing bubble took place back in 27 28 when we had that happen almost 10 years ago, right? The U.S. government was the biggest buyer of mortgage paper, and what they did is they really subsidized the market. And so we saw these record low interest rates that were, really phenomenal, and that was done intentionally, right? It was done to try to bring the housing market back to life, to, keep the economy from totally collapsing, from people, from totally losing properties and losing houses. There's all kinds of government interaction, that the government did to try to prop up the housing market and the economy. And one of the things that they did is they bought mortgage paper. Okay, they were the biggest buyer of mortgage paper, that was out there. And when they did that, they subsidized the market, and they've been subsidizing the market up until probably the end of 2017. At the end of 2017, the government kind of tipped their card and said, "Hey, we're going to stop doing this, right? We're not going to continue to subsidize the market, and we're going to let some of the paper that we currently hold kind of roll off, if you will," meaning that they weren't going to continue to reinvest dollars into the mortgage market. And, all of that government money that was kind of propping up the market and keeping rates really low has been going away, going out of the marketplace. And we're back to really what is more of a traditional mortgage market, where the market is not being swayed or as impacted by, the government subsidizing it. And that's one of the reasons why we've seen, this large run up in interest rates, especially since, early December 2017, right? In the beginning of 2017, or I should say December 2017, we've seen a really strong move up in interest rates since then. Nobody can forecast where rates are going to go. Okay, so let me preface by saying that I can't forecast where interest rates are going to go. The only thing I can tell you is that rates are going to change. Right, they're going to go up, they're going to go down, but they are going to change, and that's a given. Okay, so it's the long story made short here is the reason that we are seeing higher interest rates is basically the government is slowly pulling out of the mortgage market. They are slowly going to stop subsidizing the mortgage market, and the market is adjusting for that, and it's pricing for that, and it's taking all that into account in the rates and terms that are available to you as a would-be homeowner. Okay, so do I think we're going to continue to see some pressure on mortgage rates? I do. I really do think that that's likely going to continue to happen. What that means for those of you who are on the fence, who are thinking about buying a house, and maybe you're just waiting because you're hoping that prices are going to go down or that the market is going to improve in your favor somehow, you're really playing with fire. Okay, you're taking a heck of a risk in hoping that rates are going to move down and or hoping that prices are going to improve, right? I don't know that we're going to likely see a huge improvement in inventory because that's been a big challenge for a lot of buyers, is being able to find something to buy. And I certainly don't think that we're likely going to see a huge increase, or I should say a huge benefit in interest rates moving in your favor. I do think there's potential to see an increase in interest rates, and that's one of the reasons why I wanted to kind of address what we've seen recently, because I've had a lot of clients recently that have had some concerns as far as what's going on with interest rates and the fact that rates have shot up, pretty significantly. So I wanted to make sure I talked about why is this happening. Okay, it's happening because the government is taking that money kind of out of the system. And the flip side of that is if you qualified for, let's just say, a $1,500 a month payment, when interest rates rise up, that $1,500 doesn't go as far as what it did when interest rates were lower. So, if you're out there and you're looking, let this be kind of a call to action, right? That you should have maybe a little more urgency than what you did before to try to find something that works for you while money is still very attractive. And let's be honest, guys, a 30-year fixed rate, even at, let's say, 5%, is historically actually really cheap money. We've seen these really low fixed rates in the 3 and 4s, for so long that, to hear, a 5% rate makes people think that, that rate is really high, when in all honesty, historically, that's been a really cheap rate, if you got something in the 5s. So I just wanted to, point that out as part of this week's podcast. We'll talk more about rates in the weeks to come. This is a really technical subject to try to break down, and I'm really putting it in a really simple kind of explanation for you. Long story short, the government's not, subsidizing the market, and that's having a huge impact on where rates are going. Hey, my name is Dan Moralez. My NMLS number is 709729. You can find me online at danmoralez.com. That's DANMORALEZ.com. Or you can call me at 616-931-4629. Hey, if you know somebody who's going to be buying a house, or you personally are going to be buying a house and need a mortgage, we want to help you. We lend in most of the 50 states, so we'd love to take the opportunity to be able to help you. If you're going to be doing that, sometime in the foreseeable future. And, we'd love to just be your partner in that home purchase. Hey, thanks for listening, and stick around. There's more coming in the weeks to follow.